Well, India is one of the fastest growing economies in the world and has emerged as a top FDI destination. A large consumer base, growing disposable incomes and the improvement in the ease of doing business are key drivers for the emerging global preference for investing in India. Over the years, successive governments have liberalized India's FDI policy and permitted up to 100% FDI in most sectors and now even under the automatic route. As a result, we have seen increased FDI inflows into the country. In fact, in FY17, total FDI inflows into India rose to an all-time high of $60 billion, but unable to sustain that level, falling now to $48.2 billion in FY18. So while the Walmart-Flipkart deal is proof that India has the potential to attract multi-billion-dollar investments, if you look at the fine print, it isn't actually FDI because it is a deal that is being done. The transaction is actually outside of India because Flipkart is based in Singapore. The fact is that such deals are far and few between in limited sectors like e-commerce, which begs the question, why is India not attracting big monies across the board? What about India's policy environment is not engaging the billion-dollar investor? Good evening. Thanks for joining us. I'm Shireen Bhan, and today on Eye on India, we try and address some of the big investor concerns and why FDI in sectors like manufacturing is not coming in a big way. Joining me today, Bharat Kaushal, Managing Director at Hitachi India, Shankar Ranganathan, Head Policy Research and Advocacy at Invest India, and Ajit Krishnan, Partner Transaction Tax Services, EY India. Gentlemen, appreciate you joining us here on the show. Ajit, let me start by asking you about the trends. And, you know, we make a big deal, which is rightfully so, about that $60 billion number, which is a record that India has seen in terms of FDI inflows. But since then, we've actually seen a decline. And globally as well, we did see an 18% drop in FDI flows in 2017. We don't know whether that trend is going to be reversed in 2018 or perhaps get worse. What is your assessment at this point in time?
So I think the 48 billion was really a number up to December. So, you know, if we threw it up, maybe it's going to potentially cross the 60 billion number. So we're still waiting for that quarterly result to come out. But when we look at it, I think the larger construct is what's the story in India.
Yeah.
And I think India, clearly from an economic standpoint, I think everybody, whoever global investors or local investors you speak to, they clearly recognize that there's a power of India and capital wants to come in. Yes, there are hiccups along the way in terms of how you deal with regulations and governance and many other factors, but clearly there's capital waiting to play in the Indian market.
But has the regulatory environment changed significantly? I mean, we've seen the abolition of the FIPB. Most sectors have now liberalized up to 100% through the automatic route. So there has been several initiatives taken on the regulatory environment to try and ease the concerns that investors have. Is that enough?
Well, it's a positive step. So the fact is that the FIPB, when it was there, it was like a single body where everybody aggregated, then mutually decided and discussed. Now it's decentralized. So you basically go to every administrative ministry. So if you're in food, you go to agriculture, consumer products. If you're in real estate, you go to housing. So the sector dissemination has happened, but I think the knowledge transfer. So the bigger challenge is capital flows are basically based on capital structures. It's on the ability to get your rights, claims, capability to get your waterfalls, your returns. So the corporate structure dissemination with the sector knowledge, I think that piece is taking a little bit of time.
Okay.
So if you look at, for example, defense sector, you know, the defense sector has certain prerogatives. They are very clear on security, national security, technology.
Sure.
But to explain ownership, how ownership works, what is the changes in regulations, how do you look at significant ownership versus minority ownership, what do those rights mean, how do you influence boards, what's the relevance of board, that's corporate information. Now that knowledge transfer to an MOD really needs to happen, which is taking time, but it's happening. It's slow, but it's taking time.
Okay, a work in progress. Bharat, as an investor who's looking at the India opportunity, what's changed today and what do you continue to believe are the issues that you would like to see being resolved?
You know, we have capacity on ground. We're about 30 odd verticals across infrastructure, manufacturing and digital business in India. And we see that principal engagement partner in the first term is going to be the government. Because public investment is an equally important figure to look at.
And that's what's driving growth at this point in time. It is in private investment.
And so public investments typically are in trunk infrastructure and they take a little bit of time for realizable commercial products to take attract real FDI. And so FDI is on the horizon. Everyone thinks India is not just an opportunity, but a big priority as well. But they're waiting for that level to make the other
What would
jump.
be the tipping point?
I think, first of all, investor is driven both by sentiment and fundamental.
Yeah.
And the sentiment keeps, if you show 60 billion as some number which will be always there and there is a brighter future, there is no reason why it will come down, because the common sense of India is very well understood. And if you look at some big gateway things, I mean, railway, for instance.
Yeah.
Happenings, modernization of Indian railway. There is metros and urbanization driven India, and there's also the bullet train.
Yes.
I mean, so from our perspective, you just have to bring the ecosystem of railway manufacturing into India in a big way. And the other combination is the digital India, which is so far an independent of infrastructure kind of an island, is now getting increasingly merged, because you're saying, I work for railway, bring more predictability for railway and asset management, etc.
Yeah.
But actually, I'm beginning dynamic headways, bringing more predictability even to the citizens.
Right.
They can know when and how they will get down from a metro, find automatic
Sure.
telemative tools, and etc.
I want to pick up on the point that Bharat made about creating these manufacturing ecosystems here in India, whether it's railways, defense, or other sectors where the government hopes to attract foreign direct investment into. But if you look at the numbers, the share of manufacturing to GDP, which has been our aspiration of taking it to 25%, has stagnated at 16.5%, even through this 4-year period of the current government. If you look at the share of FDI into manufacturing, the story doesn't look particularly encouraging either. Why do you believe that's the case?
So first of all, the number what you are saying is right. It is stagnated at 16% of GDP, the manufacturing. However, there have been quite many changes globally. For instance, there is a blending of services and manufacturing that is happening.
Yeah.
As a result of which, we should not just look at manufacturing isolatedly.
Sure.
We should look at both services and manufacturing together.
Okay.
And it's difficult to disaggregate those numbers. And when it comes to FDI in manufacturing, we are seeing quite a bit of green shoots on the ground. For instance, we are seeing not just the traditional FDI investors like USA or UK, but also we are finding that as Invest India, we are working with multiple Chinese and Korean investors who want to invest in manufacturing in India. So overall, the competitiveness of India is increasing with time. And it is not a one-time event, it's a process.
No, I agree with you that it's not a one-time event and it is a process. But let's talk about competitiveness.
Sure.
And if you take a look at our export basket, one of the areas where we had competitive advantage and the competitive edge was the textile sector. But we've now seen that consistently our share within the global textile basket is declining. And we've given up to countries like Philippines, Cambodia, and so on and so forth. What seems to be going wrong there? What is coming in the way of our competitive advantage?
Textile is a more particular case, I would say, where there is a labor cost advantage as well as some FTA and free trade advantages which countries like Vietnam, Cambodia have over India. And going forward, we have to focus more on value addition, which is what the government is trying to do. Like focusing, in addition to the apparel and lowering the cost of doing business for our manufacturers, focusing on technical textiles and other such garments where there is a value addition happening.
Okay. The value addition argument we've heard, but that doesn't necessarily mean that you continue to lose share in a sector that is an employment generation sector, which is important for a country like India. But Ajit, just on the issue of, we were talking about competitiveness, we had the CEO of Triumph on the channel just a few days ago saying that, look, post the hike in duties that was announced in the budget, it doesn't make sense for us to assemble in India. We'd rather come through the Thailand route. Now, what are you hearing from others at this point in time in terms of possible duties that could be a hindrance from the dream of manufacturing assembling in India?
So I think the inverted duty structure issues that will continue, like Shankar pointed out, in those countries which have an FTA, which is probably advantageous. And I think if you look at the overall ecosystem, it will be a product-wise issue. I think the issue is not really a duty structure because it's a temporary issue. As in the moment policymakers realize it and you bring it out there, then they obviously look to address it, and it's an easy addressable issue. I think the issue has always...
But the point is, why get to this spot in the first place, right? I mean, it might be an addressable issue, but you just change the duties. And don't investors want predictability, whether it's policy or tax? So you can't keep changing the game on people every 6 months.
No, and that's fair, and that's perfectly logical. I think it's a dynamic world. And I think most investors that I meet, they understand that India is representative of a bit of chaos, but it's also the challenge and also the opportunity. And I think the opportunity plays out far greater today. So when I meet people, and I think the sense that I get is the greed of operating in India and making larger impact is far outweighing the fear that existed maybe a few years ago. So I think there's a big shift.
Yeah.
The larger question is around infrastructure, availability of land, availability of power and consistent, which has progressed. It's still not hit that point of saying, I have complete confidence.
Bharat, and I want to talk to you about this. I think it's, the debate on whether you need to be in India is settled. I mean, there is consensus on the fact that this is an opportunity that you cannot ignore. The question, though, is in what form or fashion will you be in India? Let's just use the Walmart-Flipkart deal as an example. While we would like to argue that it is one of the largest FDI deals, but actually it is not FDI coming into India because Flipkart is headquartered in Singapore. Now, the reason that has happened is because the laws of the land have forced Flipkart out of India and forced it into headquartering out of Singapore. So the question that I'm asking you is, we all get the opportunity. What is it as a foreign investor that you would like? Predictability, stability, obviously. Outside of that, what is it that you would like that will ensure that we continue to see a steady flow of dollars?
Yeah, I think there are two levels of change as far as manufacturing is concerned for an FDI investor. One is the global technology run towards Industry 4.0 and industrial IoT, etc. And GST on the domestic ground makes all regional players very competitive if they want to realize the digital marketplace within India. So they look at industrial IoT solutions without the willingness to really spend on them, and a more OPEX model is required for providers of the intermediate stages so that throughput efficiencies are increased. Now, these are all ongoing processes and they've been just cut short on time. Normally, they happen at different sequences, different places in a sequential order. But just now, we can see that all this is getting constructed.
Okay.
And therefore, in certain sectors, the realizable benefit is much more.
Right.
And in the deal that you spoke about, really the money is for investment coming into India. I mean, besides the premium that will go by divestiture. And they bring an ecosystem where they build the offline synergies to online capacities that are getting created exponentially. That's where the trick is, to understand. So it's not about Indian company being bought over, etc., etc.
And the hope
so
is
it's going to really augment manufacturing
and that is
in a
the
GST
hope, that it will, in fact, end up setting up a global supply chain here that India will benefit from. But Shankar, let me ask you, in terms of what we're seeing, structures, trends, also, while FDI is clearly very important, we also need domestic capital. And that has been a cause for concern as well. What do you believe are the trends that we're now seeing in terms of the way the deals are being structured, in terms of what your expectations are of outbound as well as inbound M&A? What are you working with in terms of your assumptions for 2018?
Sure. So many of these measures like ease of doing business, GST reform, or the new bankruptcy and insolvency code are not just for foreign investors. They are going to help for domestic investors in the long run. And also the solving of the double balance sheet problem has resulted in, now the latest RBI data is actually showing green shoots in private investments. So rather than a public investment driven growth, we are again shifting towards the private investment driven growth, which is very positive for India, but for both foreign as well as domestic investors.
Ajit, what are you seeing in terms of structures? And also, is 2018 going to be a big year in terms of cross-border M&A, inbound and outbound both? What's your own expectation?
So I think one big shift structurally that happened was this whole alternate investment fund regulations, which came in about 3-4 years ago. I think the fact that there was a very clear categorization, clarity of how you can raise capital, the fact that it's owned and managed by an Indian fund manager means there are no FDI regulations on the downstream investments, has been a very strong positive.
Okay.
What that does is, away from a strategic FDI player who's trying to do an acquisition to do business, the fact that you can now have a structure which actually allows you to raise capital globally and locally and then put it into businesses. And when you look at the whole MSME segment or any large or a good company in the medium-sized space wanting to break away, they need access to that capital. And this whole AIF community has been able to raise substantial capital. This is still a lot of work to happen on the AIF, but I think that's a structural reform. The second thing that I'm seeing is the whole IPO play.
Yeah.
I think 2018 is going to be big.
But 2017 was a big year, so you expect that 2018 will be a bigger year?
Well, there's a bit of a rush, and I think clearly IPOs are going to be the trendsetters over the next few quarters. Probably just before election, there will be this sentimental issue rather than the fundamental issue.
Yeah.
But clearly IPOs is the way to go. The limited challenge that has been there is, again, IPOs, in an Indian market, IPOs are still in a very classical form regulated. And they're not really focused around new age, new businesses. So, if you're a loss-making company, you're really not expected to do an IPO.
Yeah.
So if any company which is large in scale and size, wanting to raise capital from the capital market doesn't have access to that.
Okay, gentlemen, we are going to take a break on that note, but when we return, we continue our conversation on the FDI trends and the potential and opportunity that India has. That and more when we return. You're watching Eye on India.